Okay, welcome everyone to the Philios FX channel. I believe most of you just chance on my channel this way. Yes, but I'm hoping you stay with me while I break down the BTC USD trade with you. And trust me, um, when most people see channels like this, they feel like yeah, these channels are not worth it. But trust me, I am going to give you so much value better than most of the channels you are seeing on this YouTube. So what I want you to do is to subscribe, just subscribe, okay, and watch till the end to get these values. Yeah. So we are analyzing BTC USD. Now the first thing to do is to get your psychological levels. Okay, get your psychological levels. Now, in a layman's term, what are these psychological levels? These psychological levels are levels where you feel like price is likely to react to those levels. Okay, react in what sense? Maybe you could see a reversal at that region, you could see a break and a retest at that region, and the rest. You could even see a ranging market at that region. So let me give you classical example. Let me give you classical example. Look at something. While market was about to get to this psychological level, you could see there was a ranging market over here. We broke out and made a halfway through into the other region. Then we retested. After breaking out to the sorry, we didn't retest. We broke out to the downside, and then after breaking out to the downside, you could see a retest on that region. We broke this level, we broke that level. We see market reacted around this region, but you could see the bearish presence was so much that this level couldn't hold, so we broke out to the downside. Okay, so this is basically what we mean by psychological level. Look at this region. Okay, look at this region. You can see, look at this region, look at this region. So the not that it is not a holy grail that always market is likely to um change direction at that region, or probably, let's say, react to that region. But that's why we are traders, that's why we are patient. You would have to look out for signs of rejection, signs of reaction, and all those stuff. Okay, that's why we are traders. So you could see this region on a higher time frame. We didn't retest, we didn't do anything. But if you go to the lower time frame, you could see there was a small reaction, but just that it's not so much huge. And look at this one. You could see at this region there was a ranging market. You see, there was a ranging market. You could see ranging market. Sorry. You could see ranging market. Okay. So now, what are we seeing? Now let's come to the current price action. What are we seeing? We are seeing a strong bullish presence. It's more or less like this one. It's more or less like this one. This one. So we are seeing a very strong bullish presence. Okay. And since we are seeing a strong bullish presence, we are keeping it in mind that still the bulls are supposed to go all the way to this region to fill up this region. But since that part is a psychological level, the bears would like to interfere. Okay, the bears would like to interfere. So, from our higher time frame perspective, we are saying we are buying. Okay, we are buying. That's what we have in mind. We have in mind that we are going to buy this market. Now look at the reaction around this region. Look at the reaction. You can see a strong bullish presence, all of a sudden, boom, bearish presence, and now another bullish candle has come to take over. But in most cases, if price is supposed to reject that region, you could see that after this engulfing candle, the rest of the candles, the bullish candles, shouldn't have so much volume, shouldn't have occupied, the body shouldn't be so much big like that. Like this one, you could see this one. You can see this one. This candle is very big, as compared to the RICS, you could see. But let me draw what's happening around this region. This is on the chart form. This is what's happening. Then we had a strong bearish presence to this region. Now the bullish presence should be something like this. Should have been something like this. That you could see, oh, okay, we are retesting. But this time around, what have we seen? What have we seen as the bullish presence? This is what you are seeing. Boom, bearish. Boom, bullish. Boom. And now the bears are trying to interfere little. You see, this is what you are seeing. Oh. This is what you are seeing. So basically, in my mind, I will be like, yeah, we are supposed to buy. Looking at what the market is presenting, we are likely to buy. But if you are likely to buy, now the main deal is we don't want to be buying at any region. Okay, we don't want to be buying at any region. So we are looking out for regions where we need retest, something like support level, demand level, and those stuff. Okay, so if you can see on the on this time frame, you could see something like this. Market behaved this way. This is a high, a low, a high. Came back to retest the previous high. After breaking out, price came back to retest the previous high. So what do you think? What do you think is happening? A breakout and a retest, right? And in every breakout and retest, we are supposed to take out the high, the highest high. Okay, we are supposed to take out the highest high. So let's move on. And internal wise, so you let me come to the 5 minutes time frame. Internal structure wise, you could see there was a high over here. After breaking out, price didn't retest. Price showed reactions around this region, but the reaction was too small. The bears broke out to this demand region, retested it, and then moved back up. So now it's more or less like we are having a demand level that we need a retest again. Okay, yes, exactly. So since we have had internal structure, internal high not retested, we are looking out for price to come back all this way to this region. But this is a support level. Under the support level, there is a demand level. I believe you are taking it. Under the support level, there is a demand level. So under this demand level is where we want to be buying, because yeah, obviously that's the support level is much pricier than the demand level. Okay, the support level is above the demand level, so it's more expensive than the demand level. So we are always, and since we are looking out for prices, lower prices to buy from, we won't be buying from the support level, rather we will be buying from the demand level. Please, I believe you are getting me. Yes, there is even another demand level around this region, but since this one is very volatile, we are not going to pick that one. Maybe later on, if we are taking out, then we will come all the way to this region. If later on we are taking out at this region, then we will come all the way to this region. Take this demand level. But I believe we are not going to take out this one. If we take out this low, then we should probably be looking out for sales. Okay, we should probably be looking out for sales. Yes. So that is it. So we are calling out a buy on BTC USD at 91791. Okay, 91791. .22. We have .22, but don't take it that much. Yeah, BTC is very volatile. Yeah, so you can add it. So 91791.22, and then we are putting our stop loss at 91724.93, and then our take profit is open, so you should be targeting the swing high. So me particularly, this trade is a 1:8. So when we get to 1:4, and if you are with me in this trade, I will just advise you to just close the trade. So we are looking out for TP1 at 92134.70, and then the second one at 92390.54. So I'll be updating you on how this trade will go. Thank you very much for watching, and I'll see you in the next video. Peace out.